The cryptocurrency market may be erratic. Since their launch, cryptocurrencies like Bitcoin and Ethereum have experienced enormous price jumps and drops, sometimes even within minutes, leaving many investors perplexed as to how such volatility can exist at all. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed to make educated and timely decisions and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here we are building a community to help each other stay informed and make the most of our financial gains. When investing in cryptocurrencies, many traders and investors are concerned about the issue of crypto volatility. Why is the cryptocurrency market so unstable? By design, cryptocurrencies are volatile. The marketplaces for cryptocurrencies are very speculative, and there is no formal regulatory framework in place for their trading. Therefore, compared to stocks and bonds, the price of cryptocurrencies fluctuates more. Depending on how an investor views it, this unpredictability may either be beneficial or detrimental. Understanding how the supply of cryptocurrencies varies as more people purchase them and as the mining process continues to generate new coins is crucial to comprehending their volatility. When more individuals desire to purchase Bitcoin or Ethereum, the value of such currencies rises as a result of the increased demand. Because there is a greater demand for coins than there are sellers, the price of coins rises due to the restricted supply. However, when there are more coins accessible, the cost of those coins will decrease as more individuals have an incentive to acquire them and more people are eager to sell them. As a result, there is more competition on the market, which may lead to lower prices. Because of this, cryptocurrencies with a high volume of coins in circulation often have lower values than cryptocurrencies with a lesser volume of coins. This is because the price decreases when there are more coins available on the market, indicating lower demand, which is one of the reasons Dogecoin is unlikely to ever hit $1. This holds true for equities, other financial products, as well as cryptocurrency. Hype and speculation are two major elements influencing fluctuations in the price of cryptocurrencies. A new cryptocurrency usually sees an initial surge of enthusiasm when people learn about it for the very first time when it first starts. People frequently rush to acquire and sell the new currency as a result, which pushes up the price to unaffordable levels. The enthusiasm and speculation fade and finally result in a price fall as the bubble bursts once people start to believe that the currency is overvalued and start losing money on it. Cryptocurrencies frequently undergo significant price rises followed by falls. Influencers and famous people also affect how much cryptocurrency prices fluctuate. For instance, Dogecoin fell by 91% after Elon Musk appeared on Saturday Night Live in May 2021. The hash rate of the system and the energy consumption of the network are the two key determinants of the cost of creating tokens. In a proof-of-work system, such as those used in Bitcoin and Ethereum, miners compete to find solutions to challenging mathematical puzzles in exchange for fresh tokens. It becomes harder to mine and less profitable for miners to keep mining a given cryptocurrency as there is more competition for doing so. If mining becomes ineffective, miners might possibly give up and migrate to a different cryptocurrency. However, if miners move to more lucrative tokens or hang on to tokens for a longer period of time, this results in short-term fluctuation in cryptocurrency values. Certain coins may potentially suffer long-term failure because of this volatility, losing market share with time. Therefore, when mining expenses rise, the worth of the cryptocurrency rises as well. If the value of the money they are mining isn't high enough to pay their costs, miners won't keep working. A good example is Bitcoin mining, where the price changes according on the number of miners. Due to the possibility of a market crash, many people shy away from investing in cryptocurrencies for fear of losing thousands of dollars. What causes sudden decreases in the price of cryptocurrencies, and how can you survive one? All of it will be covered here. A variety of distinct circumstances might cause the value of cryptocurrencies to plummet significantly overnight. Because of the market's extreme turbulence, anything can happen at any time. So let's examine the causes of crypto crashes. Many nation-states are worried about the impact of cryptocurrency on their economies since it is still a relatively new phenomenon. As a result, several nations have either rendered cryptocurrency illegal or limited, which has an impact on those who currently hold cryptocurrency in such nations. Consider China, which boasts one of the largest cryptocurrency marketplaces in the world. Therefore, when Chinese authorities completely outlawed cryptocurrency, it had a huge impact on the whole sector. The location of mining farms had to be changed, and several exchanges were pushed to stop taking Chinese customers. Therefore, the entire crypto economy, as well as the value of the coins themselves, may suffer when a nation like this bans cryptocurrencies. Celebrities and billionaires alike use the internet to express their views and ideas on current events, since social media is such a significant aspect of our lives. However, when it comes to delicate markets, one powerful person's criticism is sufficient to trigger a crash. This is true of cryptocurrencies and individuals like Elon Musk. In the past, Musk has already significantly dented the cryptocurrency industry. When Musk's firm Tesla stated just a few months after embracing Bitcoin for payments that it would no longer take Bitcoin due to its detrimental effects on the environment, the price of Bitcoin fell precipitously. As a result, Bitcoin's value decreased by almost 15%. Despite recovering, this case demonstrates how unstable the cryptocurrency market can be and how one person's perception of their sector may cause individuals to lose hundreds or even millions of dollars. A cryptocurrency must be mined in order for it to exist and be used in transactions. Although cryptocurrency mining is the foundation of the sector, things aren't always easy when it comes to this vital activity. The morality of cryptocurrency mining is a hot topic of discussion because of how much energy it consumes and how that affects the environment. Additionally, mining cryptocurrency has been outright outlawed in several nations. The market might be severely disrupted, and coin crashes could result from this mining prohibition. For instance, a restriction on cryptocurrency mining in China in 2021 forced mining facilities to move to neighboring nations like Kazakhstan. The acronym HODL, which stands for Hold On for Dear Life, is well known among cryptocurrency investors. Although some claim that the term HODL originated as a comical misuse of the word hold, it is really connected to the classic buy and hold investing strategy as a means of reducing volatility. For instance, if you're debating whether to HODL stock, you're effectively discussing buy and hold techniques. Regardless of market volatility, buy and hold investments buy stocks and other investments with the purpose of hanging on to them for the long term. Since history has proven that the stock market tends to trend upward over time, the objective is to weather market ups and downs while focusing on long-term profit, although past performance is no guarantee of future returns. Or to put it differently, if the market is unstable, you want to hold on to your stock rather than sell it. This is a strategy that value investors frequently employ. The fundamental tenet of the HODL strategy is that cryptocurrency traders shouldn't base their decisions exclusively on monetary price changes. Investors in cryptocurrencies should keep their coins or tokens instead, weathering the ups and downs of volatile periods. Although the price of cryptocurrencies may fall, it has the ability to rise again and eventually make up for any losses. This is what happened when the cryptocurrency market crashed in June 2021. Many Bitcoin investors lost everything they had gained in 2021 when the value of the cryptocurrency sharply fell. Ethereum and Dogecoin, two more coins, also recorded significant losses. However, the bear market turned out to be short-lived as several cryptocurrency values gradually climbed back to their pre-crash levels. Investors in cryptocurrencies who cashed out during the meltdown may have suffered significant losses. But once the Bitcoin market recovers, individuals who choose to HODL may eventually be rewarded with considerably larger price movements. What effect will the widespread use of cryptocurrencies have on your digital wallet? What ways will it alter your life? Mass adoption, on the one hand, entails convenience. Think about how convenient it would be to only need one type of cash, such as digital currency, which you could use anywhere. When you have to buy something or pay a fee, you won't need to fumble with checks, cards, or cash, dirty money. You would just require your digital wallet. When mass adoption occurs, you'd initially notice that alteration. After that, consider the trade possibility. More coins will be accessible in the markets as more individuals use digital currencies as their main form of payment. More coins provide more trading options and revenue streams for you. Although there are obvious advantages to widespread adoption, there is still a long way to go before digital currencies are as commonplace as currency. Major obstacles to widespread adoption, according to experts, include coin price volatility, a lack of knowledge about the realm of digital currencies, and the legal framework, which is always changing. That's a wrap for this video. Let us know in the comments below if you think DeFi is truly the way forward. If you enjoyed this video, give this a big thumbs up. And don't forget to subscribe to our channel if you want to see more videos like these. See you next time.